DailyFX BYOA contest for week 18, July 22nd to July 28th, 2011. My name is David, and I'll be looking at the franc, Swiss franc, Japanese yen for this week. Before we get started here, I just want to say I am looking at this from the daily chart, and two lines you see on there are two EMAs, or two exponential moving averages. The blue one would be the 8 period, and the dotted red one would be the 21. Okay, so those are obviously both two short-term EMA lines that I'm using for my analysis here. Before I get started into what I'm going to talk about today, I just want to give you a brief overview of kind of what my strategy is. Okay, I don't like to put a bunch of indicators and oscillators and different things on my chart. I like to just look at the pure price action and the pure price sentiment as it develops. Okay, so I obviously do use a couple indicators here, meaning the moving averages, but for the most part I try to stay away from that as much as I can. Just try to focus on what the price is actually telling you. Okay, and I really am a firm believer in candlesticks, firm believer in price action, and I kind of look at it as reading a book. You're looking at the forex chart, and it's like reading a book. What is the book telling you? What are the charts telling you the price action is doing? Okay, so before I get started here, I just want to note that we are in a big bullish move. We've been going up for quite a while now, and that's probably not a surprise to most of you that have been watching Swiss. It's been on a tear as of late for obvious reasons, obvious safe haven reasons, and I think that's a good starting point just to look at the price action. Okay, so we are in an uptrend. We know that's going on. Okay, so let's just start from over here on the 20th of June. We had a big bullish run of about 6 or 7, 8 days up to the 97,700 level. Okay, and I'm not going to zoom back in time, but I'll just kind of show you that this 97,700 level is obviously a level that's been tested several times in the past. Okay, so it's no secret that it turned back around at this 97,700 level. So it turns back around, we get a drop back down below. Now this is what I really want to talk about here, and this is the key to my strategy here. We've got this big bullish day here, this white candle on the 5th of July. So let's go ahead and mark the range for that. Okay, so the range for this particular candlestick was between 96,600 and all the way down to 95,120. Okay, so we've got this big bullish day. Now what happens next? We know we've had a run up, we've had a retrace, and now we think we're going back up. That's what we think is probably the obvious move here. We get the mother candle, which would be this big candle here, and we've got several, I believe 4 days of indecision. So 1, 2, 3, 4. Bulls and bears really don't know which way it's going. It's consolidating, just waiting for that next move. Now, this is where I think the forex market really shows its true color. I mean, it is really a faker's market. It loves to bring people in one way and then rip right back around and take those losers back the other way. And I think this is really what you're seeing in this case. Okay, so we know here we're in an obvious uptrend. We go up, test 97,700, go back down, and now we're making a move back upwards toward. We get 4 days of indecision, and then this is the candle that really shows you what the forex market's doing. On the 12th of July, we get a break below this mother candle. Okay, we get a break below that 95,100 level, and we go down. Okay, we go down, a good amount, about 20, 30, 40 pips. What does the market ultimately end up doing? It ultimately ends up closing back above and within the range of the mother candle. So if you were to go short here, the market would have pulled you back in, and now it's bringing you back the other way. Okay, and I think this is a prime example of retail traders or maybe beginner traders getting in here and thinking, oh, well, this was an obvious break of the 95,100 level. I'm going to short it. Okay, so you short it and then you get pulled back in, and then what ends up happening? You get a bullish rip back up, about 200 pips, or ultimately back up to the 97,700 level, which was 250 pips away pretty much. Okay, so that is just one example there, a basic example showing you how the forex market really loves to just fake out and take you the wrong way. Now, let's start here. Okay, on the 18th of July, we had a bearish belt hold, or a bearish engulfing pattern, as some people would call it. Basically, the bottom line is a market sentiment shift from bullish to bearish. Again, that's the bottom line. The 97,700 level, we come back down, and now we're trading around the ascending trend line. Now this is very important. Okay, let's move our ranges here on this candle. So now we're looking at the candle that was formed here on the 19th of July. Okay, so here's our range. Again, we've got this bearish range, and we've got two indecision candles. Now these indecision candles are kind of showing you, okay, we don't know if we're going back up or are we going to get a break of this. Okay, so bulls and bears are kind of battling between each other, and it's very simple to see here. We go up, we go down, we close at the same price. We go up, we go down, we close at the same price. Nothing's going on. Now this is where I want to again talk about how the Forex market is a faker's market. It loves to do one thing and then rip right back around and take all those losers back the other way. Okay, so let's say you're looking at this pair. You see you've got this range, this general range of about 95,700. Price breaks down below. So you're thinking, okay, hey, let's short it here. This is probably a good point to short it. Well, too bad. It hit this level here, okay, at 95,350. Closed back above within our ascending trend line. And now if you're short, you're really looking at a bad situation here, okay? Because what you're looking at is you just got pulled into a faker's market. You got pulled into a contrarian move, okay? So that what the chart is telling you is that we should be breaking lower, right? Because we broke this trend line. Well, sadly enough, it closed back above, and now we're jumping back up, okay? So much like the example that I showed you from this false break here on the 12th of July, I really expect this to be a false break as well. So the 22nd of July, I kind of expect that to be a false break. And ultimately what I'm looking for this week is I'm looking for a move from the 95,866 level that we closed at up to around the 97,700 level, possibly a retest of where we've been. Okay, and again, this all goes back to just pure price action trading. We're not stuffing our charts with a lot of indicators. We're just looking at the Forex market like it's a book. What is it telling us? What is it telling us that's going to happen? Okay, so I think this is a very solid trade from several standpoints. You're in an obvious uptrend. Price action has been kind of pulling in a lot of traders going short, and it continues to show strength going upward. From a fundamental standpoint, it's the Swiss Franc. So with all the debt ceiling talks going on and the European issue changing every 15 minutes practically, you're really looking at possibly a very strong move for the Swiss going forward. And again, the yen can be considered a safe haven, so you've got to consider that you might be pitting two strong currencies against each other this week, but ultimately I think the Swiss prevails, and it's been on an obvious tear lately, and I just don't see it ending anytime soon. So that's my analysis for this week. I'm long Swiss yen, and I'm targeting that 97,700 level, which is about 200 pips away from where we're at. And that's my analysis for this week. So thank you for watching. Good luck trading, and we'll see how this one turns out.